Hello there, my friends. Chris Marcus here with you on Wednesday, September 27th on behalf of Arcadia Economics. Today's video, just a quick story in the gold space that I thought was interesting. One of the largest gold investors, John Paulson, who made a lot of money betting on gold leading up to the last crisis, his partner, Marcelo Kim, actually had some interesting comments where essentially they're calling for, I guess if you want to call it oversight, or I don't know if this is the official or working title, but the Shareholders Gold Council, basically under the premise that Kim, I'm presuming on behalf of Paulson and the fund, is saying that a lot of the executive compensation in the mining space has really been out of line with what the companies have been doing, and is interesting for a couple of reasons. First of all, Paulson, like I mentioned, was pretty well known because he saw the last crisis coming, invested in gold amongst other things, made a fortune, and became quite well known for that. His reputation in the past couple of years, well, I don't know, I still think his reputation is good. Other people who have been following him when his fund hasn't done quite as well. And it mentions here that Paulson even took $250 million of his own money to start a new fund that was invested in the gold miners. Interesting here, based on unprecedented monetary stimulus. Now, depending on how long you've been following the gold and silver space, you may be well aware that since 2011, really when we were in the heart of all these quantitative easing programs until today, it's been a tough 6 years for precious metals. And certainly, one of the things they mentioned in the article here, several producers poured money into mines just as the prices fell. So why are these executives being given massive pay packages? Which I think there's some truth to that. I'm not disputing that. Although it was interesting in the version of the article that I read, see, the introductory comments I found fascinating in that, now this I don't think was coming from Paulson or his partner, but the person presenting the article saying, forget about all the naked shorting, here's the real problem. Meaning the excessive executive compensation, which that part I'd slightly disagree with, just from the standpoint that the two are linked. So, for example, if companies were ramping up production as prices were going up 2010, 2011, based on what was unprecedented monetary stimulus, to me, that's a reasonable decision. It's essentially the same thing that Paulson decided. And it was the same thing that I decided and that drew a lot of other people into the precious metal space, because I would argue they rightly saw, wow, the money printing, again, if you Google St. Louis monetary base chart, you can see how it just went exponential until prices collapsed, which I've spent the last 6 years analyzing and studying, and if there's anyone who can explain how that was due to anything other than the banks coming in and selling a lot of paper. Again, what's further interesting, maybe get its own video one day, is when Deutsche Bank settled in the precious metals manipulation case, they released the transcripts of their traders' chat records. It's basically IMs, all these things where the traders communicate with each other. Which again, just for perspective, when I was still on the New York Stock Exchange, I liked our compliance guy, so I talked with him often, and he was always telling me 2 out of every 3 things that you type are read by someone. And certainly these transcripts, including on some of the nights where we saw these massive price drops, that certainly from a trading standpoint I mean, if you really have a big order to place and you do it in the middle of the night when there's no liquidity, that's the kind of thing that would have gotten you thrown out of the shop that I worked for. Now we have transcripts where these guys are bragging about manipulating it. So were the CEOs in the mining companies, if they invested back then based on what they saw? You know, I guess that's a question maybe you can think about or take up with Paulson if you're one of his investors. But I don't think the two are unrelated where, okay, so if they were wrong about that and you want to not have an excessive pay package because the company's now saddled with debt, I think that's fair enough. Although perhaps, and again, I think what Paulson or his partner is saying is fair, although maybe where I'm going is that perhaps it's missing the bigger issue here, where I'm not as concerned about how much the guy's getting paid. More so what concerns me is how a lot of the mining CEOs that, in my opinion, should be at this point familiar that something funky is going on in the market where day after day you see price movement that shows virtually no correlation to the actual fundamentals, the data that's going on, which is one of the reasons, and if you're a longtime Arcadia watcher, you may remember, or you can go back and see, I did a video about Keith Neumeyer, and he's the CEO of a silver producer called First Majestic Silver. And one of the things that I love about Keith, and that has also led me when I get into the miners to invest in First Majestic, is that Keith speaks out about what's happening. He says, yes, we see it. It's obvious. We see the manipulation. It helps to some degree. I think Keith is a former trader, so sure, maybe he has a background that some of these other guys don't have, although I think it's been explained by enough different people, enough different sources, that certainly in a CEO of a mining company, that to see if the price of the product you create is being artificially distorted, God only knows by how much. I mean, it's still a mystery of really how much silver and gold would be worth without the manipulation and the short, naked selling by the banks. So at least Keith speaks up about it, and perhaps if I had a real complaint, or let's change that word. I don't want to have complaints. If there's something that I would like to see done differently, would be some more of these mining executives saying, hey, there's some illegal behavior going on here. There's evidence. Let's do something about that. Or at least if you're not going to speak up, position your company. I don't know, maybe that means not selling as much of your metal at lower prices. Now, again, I understand these aren't clear-cut decisions. You have a business to run. You have people to pay, expenses, so you have to sell your product. Yet, again, that's one of the things that I love about Keith, where at least if he's aware of it, you think, all right, well, here there's more likely than the guy who seems oblivious to it that Keith could position his business to incorporate this, use it to the business's advantage. And hopefully that's the kind of thing that if they do indeed go forward with the Shareholder Gold Council, which I guess one of the things the article mentioned is that, shareholders are spread out, so it's not like there's 3 or 4 guys that you can come to maybe an agreement on, but giving recommendation, with what it did say they're planning to do is give recommendations on voting issues and I guess more of an oversight capacity and to guide and hopefully bring some more truth to the industry. Because certainly while I love the investment profile of gold and silver, and I think that if you have the right miners and you can actually get out of your trade at some point, that the opportunity is incredible. Of course, within the actual mining industry, I'll leave you with this Rick Rule quote. Rick of Sprott Global, in my opinion, one of the best mining analysts in the game today. And I remember one of his speeches, Rick's always got a great way of presenting things. And he said a lot of these mining executives, if they weren't running a mining company, they'd be going into 7-Eleven with a gun and a hockey mask, implying that there are a lot of good folks in there and a lot of characters in there that perhaps you might want to be careful about giving your money to. Certainly, again, why if you are getting into miners, personally, I always like to have physical metal first before touching anything that's paper, which includes miners. Now, with that said, there are opportunities, and this is not specific legal financial advice, but another thing that Rick points out that I've always found really helpful and heard echoed from a lot of the other top voices in the mining industry is that there's a lot of good stuff, a lot of not so good stuff, and really investing with people. Invest with the people who know what they're doing. Invest with the people who have a track record of being honest. Invest with the people who have good relationships and a good reputation. And you can do really well. If you do need more help with that, you can, again, check out Sprott Global. By all means, feel free to tell them I sent you. That's where when my mom finally bought into what I had been seeing and talking about, where I put some of her investment money. So again, not just saying this for any of the things that I come on here and say. My goal is to share what I've learned, hoping that it can be helpful in your life and lead to some better outcomes. Again, I just saw the Wall Street way, and then I saw the non-Wall Street way, and feel it's worth sharing. So with that said, hopefully you found this video helpful, hearing about Paulson. Certainly it's nice to see that he's still in the gold space. I think at some point, a lot of these guys, hopefully myself included, are going to do really well in the gold space. And anyway, just keeping you updated. So hit the subscribe button. Hope you found this helpful, and we shall see you again tomorrow. Thanks for watching.